right, welcome everybody to the After Hours channel. For those of you that don't know, my name is Anthony. I'm a long-term investor with a passion for money, stocks, and personal finance. On this channel, I'll be sharing my insights and experiences as I track the performance of my dividend portfolio. I believe in the power of long-term investing and want to show you what it's like to be a long-term investor in today's market. Whether you're just starting out on your investing journey or you're a seasoned pro, I hope to provide valuable information and resources that will help you make informed decisions about your money and investments. Join me as I share investment strategies, discuss current market trends, and provide tips and tricks for managing your personal finances. Subscribe to stay up to date with the latest from the After Hours channel, and let's build our wealth together. All right, welcome everybody. Thanks for tuning in. I appreciate all the returning subscribers and anybody new here. Thanks for checking out the channel. For those of you that don't know, this is going to be episode 13 of Road to 1 Million. If you guys don't know what that is, essentially I'll be tracking this portfolio that you see on your screen right here all the way to $1 million. You'll be able to see my trades, which are weekly. You'll be able to see the dividends in a six-figure portfolio, and I'll also be giving you guys a heads up on which companies I'll be buying in the future. So for this video, I want to do things a little bit different. Essentially, I just want to do a full portfolio update. So I'll go through how the portfolio has been performing over the last year, because as you can see, as the thumbnail of this video, it has been crazy within the last 3 months. The market has just been shooting up, so we'll break that down. On top of that, I'll also be diving into the stocks that I currently own in my portfolio, which you can see on the right of your screen now. And essentially, I'll be going through some of the stocks that I hold, and I'll be letting you guys know whether I think they're overvalued, fair value, or undervalued. And with that being said, I'll also be telling you guys what I'll be doing with some of these holdings. For instance, am I going to be selling them because they've raced up recently? Am I going to be holding them? Or do I think they're undervalued or at fair value and I'll be buying more? So if that sounds like something you're interested in, stick around. So jumping into this, we can see that for today, the portfolio returned actually negative $184. At its peak, the portfolio actually was up around $1,000 today, or 0.85%. So it was looking good, and then it had a steep drop off towards the end of the day, which put it in the negative. If we take a look at the 1 week view, we can see the portfolio was up 1.7%, or $1,400. Jumping over to the 1 month view, things are starting to change a little bit. The portfolio was up 4.55%, or $5,400. So this is where things start to get interesting, starts to put a smile on my face as an investor, because a lot of the holdings that I have in my portfolio were bets from years prior. So I'm just waiting on them to work out, and it's starting to look like that is coming to fruition. Taking a look at the 3 month view, and this is where things get a little crazy. The portfolio as of 3 months is up 12.58%, or $5 under a $14,000 return. So regardless of your investing style, whether you're a long-term investor, a dividend investor, or a day trader, that is a great return in 3 months. Hence the reason I'm putting this video together, just to go over what is happening recently. Taking a look at the year to date, you can see the portfolio is actually up 22.38%, or just under $23,000. Now, I don't know about you, but that is a great return in my opinion, and one I cannot be mad about. Now, with that being said, obviously, I can't predict the future, so this market could drop off within the next few weeks or months, but as of right now, I'm pretty happy with the returns. Taking a look at the all-time returns for this portfolio, you can see that I am up 25%, or roughly $25,000. Started putting money into this portfolio right around the end of 2019, and as you can see, we rolled right into the pandemic, so the portfolio dropped off pretty significantly during that time. I want to say I had roughly $10,000 invested, and at that point I really started buying heavily. Over the course of the pandemic and onward, I consistently bought into this portfolio. During this time, I was putting away a lot of money. I was saving a lot of money. I wasn't eating out as much, just because I knew this was a great opportunity to buy into the market. And as you can see, it has worked out over that time. Given the circumstances of the market in the recent years, a 25% return as of right now is one that I can live with. Jumping into my recent buys and sells, there hasn't been many buys just because of life. Had a lot of things going on, so I was saving up some money and putting some money aside, but I did sell off a large portion of the portfolio, as you can see right here. So starting at the bottom, we had Vici Properties. I bought like $25. I believe that was a dividend that we'll look at a little bit later. After that, I sold $3,300 of JP Chase. I did get a return on that investment, but at that time, and I mentioned in a previous video as well, I just wanted to move out of banks. Now, this was for a number of reasons that I highlighted previously, but the cyclicality of these businesses is just not something I want in my portfolio. Moving on from that, the same day I actually sold $3,200 of JEPI, and this wasn't for any particular reason. I just felt like I could use that money elsewhere to get a greater return. In my opinion, I look at JEPI as somewhere I can put my money and just get a large dividend for the time being. That same day as well, I actually sold an additional $5,500 of Starbucks. That was roughly 51 shares at a price cost of $107 per share. So I made a decent return on this investment, and I just think now the stock is overpriced, and I felt like it was time to take some gains on this investment and put it elsewhere. And lastly, as of 6 hours ago, I had a $60 dividend that I received, so I just put it into Visa. As for recent dividends, we'll take a look at a few right here. So coming up June 30th, Union Pacific is going to be paying me $33. June 8th, I got Microsoft paying me $75, which is a significant amount of money for how much money I have invested in that company. June 1st, I got roughly $6 from Visa. May 26th, I got $22 from Starbucks. And May 18th, I got $32 from Apple. Taking a look at some older dividends right here, if you guys are interested. I got another $25 from JEPI, $24 from JP Chase. Vici Properties paid me $77. JEPI paid me another $26. Union Pacific paid me $26. Schwab's large cap ETF paid me $15. Schwab's US dividend ETF paid me $181. And again, Microsoft paid me $70. So when you're a dividend investor and you consistently build that snowball over time, this is exactly what your portfolio will start to look like. These companies will consistently pay you, depositing money straight into your account, which then you can use to either buy that company again or buy another company. Moving on to some of my holdings, the first one we're going to take a look at is actually Microsoft, because it has been racing up like crazy this year. For the year, this stock alone is up 23%. And if we take a look down here at the bottom, you can actually see how much I have invested in this stock and what my returns are. So as of right now, I have roughly $37,000 invested in Microsoft alone. And as of today, that is a 34% return, which gives me roughly $9,600. Taking a look over to the right, you can see that my average buy-in price was around that $250 mark, but I was buying in around the 170 range. I just didn't have enough capital to make it a substantial holding. And as far as portfolio diversity goes, this is a 30% holding. So I'm sure you guys are wondering whether I think this is a buy as of right now, if it's a hold, or if I'm going to be selling and taking some of those profits. So let's jump right into it. So Microsoft is currently trading at $335, so way above my buy-in price. And if we move over and we take a look at the value section, we can kind of start to break down whether this company is overvalued, at fair value, or undervalued. So if you look at the PE section, this company is currently trading at like a 36 PE, which is very high in my opinion. The price to book is 11.05, which again is very high. If we move over and we take a look at the balance section, we can start to break down like what quality of company this really is. So Microsoft has $104 billion on hand. They're in debt $48 billion, which nets out to $56 billion in cash. So this company is very cash rich and could pay off its debts if it wanted to. And of course, since this is a dividend portfolio, we're going to take a look at the dividend yield, which is 0.82, which is very low. I get that. But this is one of those companies you never have to worry about them canceling their dividend. In addition, if we take a look at the payout ratio, it's 28%, so very low and healthy. So just based on the numbers that we have up here and the valuations and everything that I have studied for this company over the last 3 years, I do think this company is currently overvalued. Now, with that being said, I did just make a video about this company that I will link at the top here. You guys can go watch if you would like to. But to reiterate what I said, essentially, I quite frankly don't know whether this company is going to be trading up even higher with the new integrations of ChatGPT and their AI features. Those two tools alone could enhance the quality of this business and generate more money than expected, which in return would make this company worth more than it is currently. I went over an article previously and they estimated that with the integration of those two new tools that I mentioned, ChatGPT and AI, the market cap of this company is likely to go up $300 billion. So with that being said, and just a very quick overview of Microsoft, I currently am not buying this company. Now with that being said, I'm also not selling it. This is going to be a hold for me. I look at Microsoft as one of those unicorns in the market. This company consistently outperforms the S&P 500 and its peers, and they have the financials to back it up as well. I believe this company is ran extremely well, and the leadership teams that are in place know exactly what they're doing. Therefore, I have no problem leaving my investment in this company and holding it for the next 10 years, 15 years, 20 years. Now, with that being said, if there are any changes in the things I just mentioned, I'll obviously give you guys a heads up and let you know what I'll be doing with my portfolio. The next holding I want to take a look at is actually Apple. So in the last year, we can see Apple is up almost 23% for the year, so very similar to Microsoft. It's currently trading at $180. And if we take a look down here at the bottom, you can see how much of this one holding makes up my entire portfolio. So the market value of this holding alone is just under $25,000. And as of today, I have a 37% return on this investment, which is $6,500. So this holding has done really well for me. I couldn't be happier. I was buying into this company around that $131 mark, and it currently makes up just under 20% of my portfolio. Jumping over to the financials, let's take a look at the value section for Apple. So we can see their PE is roughly 30 right now. So again, pretty high in my opinion. And the price to book is actually 44, which is extremely high. I'm not sure if that's an error on my end, but that's something I'll probably take a look into after this video. Again, if we take a look at the balance section, we can see Apple has on hand $55 billion in cash, and it says they're in debt $107 billion, which nets out to negative $51 billion. Now, with that being said, I know this may sound confusing, and believe me, it is for me as well, but I know Apple has more cash on hand than it is stated right here. The way they handle their financials is different from most other companies, so the true value of the cash they have on hand is not reflected. Jumping over to the dividend section, we can see the yield for Apple right now is 0.53, so again, very low, and their payout ratio is 15, so even lower than Microsoft. That is a very healthy payout ratio and something I love to see. Now, just based on the overview of this company and the financials that we have in front of us, and especially the PE, which I normally would not make a decision off of, I personally do think Apple, as of right now, is overvalued. This is a company that I will continue to hold in my portfolio, and as of right now, I won't be buying any more until I see that PE drop a little bit more. If I had to give you guys a specific number, I will say if we get around that 25 PE again, I will be buying into this company. Now, I don't think I'll be making large purchases, but I'll probably start to dollar cost average in again. One feature on Robinhood I really don't take advantage of that much is actually the research report. So you can see it right here. And if more specifically we focused on this section, we can see that they estimate Apple's fair value at $150 per share. So when you have Apple trading at that $180 mark, it does look like it is overvalued currently. Per Morningstar's report, we can see that they have the economic moat as wide and the uncertainty for this company as high. Jumping back to Microsoft real quick, we'll take a look at what Morningstar has to say about them, and they estimate Microsoft's fair value at $325. I have to say that is higher than I normally see, but if they did the research for it, that is their prerogative. They have the economic moat of this company is wide, which I would definitely agree with, and the uncertainty at medium. I personally don't think the uncertainty would be at medium for this company because they have such strong fundamentals and financials, but just so you guys know. Taking a look at another holding in my portfolio, which is significantly smaller than the other two we just took a look at, and that is Visa. Visa has been having a pretty slow year. I'm not going to say it's bad because they are in the positive, but I would just call it stagnant. For the year, they're only up 5.36%, so they are being outshined and shadowed by the other tech companies. As for my ownership in this company, you can see that this holding alone only makes up roughly $3,000, and I have a total return of $50. My average cost for this company is actually $223, so not far off from where it's currently trading right now at $227. As far as percentage goes, this holding only makes up 2.3% of my total portfolio. Now, this is a holding that I would like to grow in the future. I made a whole video about Visa stock, and I'll put this in the video as well. You guys can watch it if you would like to. But this is one holding I would love to have a significant stake in. Let's jump over to the financials. So taking a look at Visa, we have it right here. Let's take a look at the value section. Looks like Visa's PE is currently 30, so right at the same PE as Apple. And the price to book is 12.7, which is pretty high in my opinion. Now, with that being said, Visa has historically always traded at a relatively high PE over the course of its existence. If I'm not mistaken, I want to say its PE is typically around 20 to 30. Taking a look at their balance section, we can see they have $13 billion in cash. They are in debt $20 billion, which nets out to negative $6 billion. As for the dividend, they currently pay a 0.79% dividend yield, and the payout ratio is 22%, which again is healthy. If we take a look right here, we can see their revenue since 2013 has consistently been going up, with only a minor drop in 2020 for obvious reasons. Their free cash flow has consistently been in the positive since 2013 as well, and looking very healthy even with stock-based compensation included. They pay a consistent and healthy dividend, which I love to see as a dividend investor. Their outstanding shares have consistently been going down as well since 2013, and they have a very high return on capital employed. In 2022, it was 30%, which is well above the market average. If you're unfamiliar with what that is, essentially if Visa invested $100, they got $130 in return on that investment. If we take a look at the research report by Morningstar, we can see they have the fair value of Visa at $241. The economic moat is classified as wide and the uncertainty is medium, just like Microsoft. So with the fair value by Morningstar estimated around that $240 mark and it currently trading at $226, I do think there is room for improvement and gains in the future. This holding, in my opinion, is a buy. I'm going to continue to buy into this company once I have some extra cash on hand and really start to build this holding up to resemble some of the others. I believe the business model of this company alone is unmatched, and they have a duopoly with MasterCard, so the likelihood of others coming in and trying to replicate what they already set the foundation for is very unlikely. So again, this is a company that I think is a buy right now. Now, with that being said, this is going to wrap up episode 13 of Road to 1 Million. If you guys have any questions about the topics we covered today, feel free to leave your questions in the comment section down below. And lastly, if you liked the video, please give it a like, a thumbs up, and consider subscribing if you want to see the companies that I'll be buying over the course of 2023. I'll see you in the next one. Take care.